Good afternoon. This is Tom Alexander. It is Sunday, August 21st. It's about 2:35 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly addendum to the weekly report that presumably you all have received. I'm referring to the material that I'll go through here is also in the written report. If you're not receiving that report and you would like to receive it, send me an email to tom@alexandertrading.com and I'll put you on the list. Also, do me a favor. If you find value in the report, please like it and please subscribe to my channel. And then if you want to hit the notification bell, you will be notified when I post new material. Okay, last week was a big week, potentially big week in the stock index futures or the stock market, the stock indices, cash or futures for that matter. We topped out on Tuesday. I put in the report last weekend that we were at least expecting the trend to slow and for some sort of short-term top to form, and it has. Now, it remains to be seen if we are not at the beginning stages of something more significant to the downside than anything that we've seen since the June low. It doesn't have to be particularly deep. It can. I would be surprised if we don't go down further than we went on Friday before we ramped to new highs. But it doesn't have to be super deep. The time factor, how long it takes, the whole balance area concept, how the market develops. We've been in this. You can make a case. And I'll just use by the way, these levels are important in each of the indices. I'm not going to go through each of them individually. You can print this out from the report, or you could just make a screenshot of this. But okay, I guess it would be pretty cool if I'd actually show my screen so you know what I'm talking about. And so the indices topped out on Tuesday. We'd sort of been looking for that. If you go back and you look at previous reports, which you can access through this week's report, you can see that we were looking for a slowing of the trend and at least some balance to occur. Now, the levels that you see on my screen here are very important, both the levels to the upside and the levels to the downside. The net of it is I'm looking for lower prices. And I don't know if I don't know if Friday's low was the low prior to a rally attempt, or if we're going to have more downside, perhaps even more dramatic downside. I don't know, but I do know, I can tell you this. As long as all four of the indices do not close above Thursday's cash session high, you're looking for lower prices. And I think what you'll see are the levels highlighted on my screen reached at some point before any attempt at a new all-time high or a new rally high is made. I'm just going to take the SPX, and you can see here, this includes Friday's high, this level, and it includes Thursday's cash close. If we were, again, I don't think we'll close above that level immediately. I think you're going to do some more probing to the downside. This has the potential to be a very, very important level. It has the potential to be a low prior to an attempt at new rally highs. At this point, there's no way to know. We'll just have to monitor the market as we get there. Now, I want to show, since we're on structure, let's take a look at the profile view. And last week, I mentioned that we'd been in this three-step process, and it was a very elegant display of the three-step process, which basically is you have a trend or a distribution begins. A trend and a distribution, the same thing. A distribution range is a trend. Then you have a stopping price, you have development. Then the process starts over. Well, and that's what we've had. So you had a ramp higher here, balance. You had a ramp higher here, balance. So if you go back and you look at last weekend's report, I was looking for balance at a minimum to occur in here, and it has indeed. Now, are we going to go lower than and include more correction in terms of both time and price than we have before? I think there are reasons to believe that that may be the case. Let's take a look at that. Okay, so here is the chart that displays price and breadth. And this is a relationship that behaves differently in bull trends than it does in bear trends. We have been in a bull trend. I don't know if we're in a bull market. I don't know if we're in a bear market. It doesn't really matter to me as a trader, a swing trader, a position trader. Now, if you're a long-term investor, it matters, but that's out of my depth. No one knows, no one can know if we're in a bull trend or a bear trend yet. Okay, so we have been in a bull trend, or at least a strong correction within in a bear market, which by my definition, by behavior characteristics, is a bull trend. It would behave no differently if we were in a ripping bull market. But the price breadth relationship is very different. And what we have seen over the past couple of months is the behavior of a bull trend, at least between price and breadth. One thing that we had been looking for, that I've been talking about for the past few days and actually mentioning for the past week or so, is we've been looking for that negative 2000 breadth reading. Now we have it. What does that mean? Well, again, this is something that can't be rote traded. There's interpretation, there's guessing. My guess is that because this is coming, the negative 2000 breadth reading is coming so close off of this rally print high, that it is more of a kickoff to potential downside than it is something we would be looking for if we'd been down for 4 or 5 days, for most of 4 or 5 days, and we've been down 5 or 6%. Then maybe you get a dramatic down day with negative 2000 breadth. That is when I might be looking for a short-term momentum low and an attempt at a rally. This, we could turn around and rally from here, but I would not be expecting it. I think that would be a surprise. Now, if we go to the shorter term breadth work, it's even more clear how a market behaves in a bull trend, how price and breadth behave in a bull trend, that relationship. And basically what you have when you are in a bull trend, you will have these expansions in breadth, and then you will have very minor retracements following those expansions as you have lower breadth readings until you get you form a low, and then you go to new highs, and the process starts over again. We've had basically 3 phases of that. This was one phase, this was another phase, this was another phase. Now we're going to see if it's different this time. If it's different this time, what we're going to see at some point, whether it's Monday, Tuesday, or Wednesday, we will see an attempt at a rally, and that will be accompanied by an expansion in breadth to plus 1500 or so, and then that rally will almost immediately fail, and you will trade to lower lows. That's the price breadth signature of a bear trend. So next week will be interesting. We have Jackson Hole next week. We have I think Powell speaks on Friday, so we have that exogenous overhang. But regardless of that, we're in a unique structural and technical position in the market where I think that we're going to see lower prices before we have any sort of significant rally. You guys have a wonderful week.